Hello and welcome to our channel. Today, we're diving into one of the most talked about stocks in the tech world, Super Microcomputer, ticker symbol NASDAQ, SMCI. If you've been following the markets lately, you've probably noticed some big moves in this stock. Whether you're a seasoned investor or just starting your journey in the stock market, this video will break down everything you need to know about Super Microcomputer's recent performance, analyst ratings, and what the future might hold for this tech company. Stick around to get all the insights. You won't want to miss this. Let's start with what's been happening recently. On Tuesday, Super Microcomputer's stock price experienced a notable gap up. What does that mean? Essentially, the stock opened higher than its previous closing price. It had closed at $47.91, but opened the next trading session at $51. By the end of the day, the stock was trading at an impressive $54.95. That's a significant jump in just one day, with a trading volume of over 46 million shares. For context, this kind of volume indicates substantial investor interest, whether from institutions or retail traders. So, what's driving this momentum? To understand that, we need to look at what the analysts are saying and examine the fundamentals of the company itself. Super Microcomputer has been the subject of multiple analyst reports over the past few months. Wall Street analysts have shared mixed opinions on the stock, reflecting a variety of perspectives based on market conditions, company performance, and the broader tech sector trends. J.P. Morgan Chase & Company, in their research note dated February 12, J.P. Morgan raised their price target on SMCI from $23 to $35. However, they maintained an underweight rating on the stock. What does this mean? Essentially, while they see potential for the stock to climb, they believe it may underperform compared to other investment opportunities. Northland Securities, taking a more optimistic stance. Northland Securities reaffirmed their outperform rating on SMCI. They also raised their target price from $54 to $57. An outperform rating suggests they expect the stock to perform better than the overall market. The Goldman Sachs Group. Goldman Sachs took a more cautious approach, cutting their target price from $67.50 to $28 and assigning a neutral rating. This indicates they don't see the stock as a strong buy or sell candidate at the moment. Wedbush. In contrast, Wedbush raised their price target from $24 to $40 and gave the stock a neutral rating. This suggests they're neither overly bullish nor bearish about the stock's near-term prospects. Argus. Lastly, Argus downgraded the stock from a buy rating to a hold rating in October. A hold rating typically implies that investors should maintain their current position but refrain from adding more shares. Overall, the stock has received a mix of sell, hold, and buy ratings from 19 analysts. According to the Sum Investor, the average rating is currently hold, with a price target of $60.20. Now, let's look at the performance metrics that make SMCI stand out in the market. Understanding these metrics will help us evaluate whether this stock has more room to run or if it's time to be cautious. The 50-day moving average is $34.41. The 200-day moving average stands at $39.72. These averages are crucial indicators for traders and investors. When the current stock price is well above these averages, it suggests strong bullish momentum. SMCI's recent surge to $54.95 is significantly higher than both these averages, indicating robust short-term performance. SMCI currently has a market cap of $34.71 billion. This positions it as a mid to large cap stock in the tech sector, attracting attention from institutional investors. The price-to-earnings PE ratio is 29.75. While this is on the higher side, it's not unusual for a tech company with strong growth prospects. The beta of the stock is 1.30. A beta above 1 indicates that the stock is more volatile than the overall market, meaning it can deliver higher returns but also carry higher risks. Current ratio, 3.77. This shows the company has more than enough current assets to cover its short-term liabilities. Quick ratio, 1.93. This indicates solid liquidity, even without relying on inventory. Debt-to-equity ratio, 0.32. A relatively low ratio like this is a positive sign, showing that the company isn't overly reliant on debt to finance its operations. Institutional investors and hedge funds often play a key role in a stock's price movements. Let's see how they've been interacting with SMCI. Emerald Mutual Fund Advisors Trust. they purchased a new stake in SMCI during the third quarter, valued at approximately $87K. While this isn't a massive investment, it shows growing interest in the stock. Miller Wealth Advisors LLC, another new entrant, with an investment worth $152K in the same period. Archer Investment Corp. This firm significantly increased its position in SMCI, raising its stake by 364.2%. Their total holdings now stand at 571 shares, valued at $238K. True Wealth Advisors LLC. Similarly, they boosted their holdings by 99%, bringing their total to 593 shares, worth $247K. Bell Bank, a new player in SMCI's investor base, with shares valued at $259K. In total, institutional investors own 84.06% of SMCI's outstanding shares. This level of ownership is typically a vote of confidence, as it signals that large, professional investors see value in the stock. Super Micro Computer operates in the tech hardware sector, focusing on high-performance server and storage solutions. The company's expertise lies in providing cutting-edge hardware for data centers, cloud computing, artificial intelligence, and enterprise. Here are a few reasons why investors are paying attention. The global demand for cloud computing and AI infrastructure is soaring. Companies like SMCI, which specialize in high-performance computing, are well positioned to benefit from these trends. SMCI is known for its innovative products, such as energy-efficient servers and advanced storage solutions. This focus on innovation helps the company maintain a competitive edge. With strong liquidity ratios and manageable debt levels, SMCI is in a solid financial position to invest in growth opportunities. No investment comes without risks, and SMCI is no exception. Here are some factors investors should keep in mind. Volatility. As indicated by the stock's beta, SMCI can be more volatile than the broader market. This means it may experience sharper price swings, which might not suit risk-averse investors. Competition. The tech hardware industry is highly competitive, with big players like Dell, HP, and IBM. SMCI needs to continuously innovate to stay ahead. Macroeconomic factors. Like many tech companies, SMCI's performance can be influenced by broader economic conditions, such as interest rates and geopolitical tensions. Super Micro Computer has shown impressive performance recently, with strong stock price momentum and increasing interest from institutional investors. While analysts have mixed opinions, the company's growth potential in the AI and cloud computing sectors cannot be overlooked. However, as with any investment, it's essential to weigh the risks alongside the rewards. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.